Hey y'all, this is Ryan with TrendLizard.com. I am posting another video for you as requested by one of our subscribers at TrendLizard.com. So we're going to take a look at Exxon Mobil. If this is something you like, if you're interested in getting your own personal customized Elliott Wave analysis of any ticker that you can imagine, I'll do 3 of them for you each month. Just go to our website at TrendLizard.com, sign up for our pro level analysis, and you will get everything you want to know about the direction of every major market, every major ETF, and every major segment, including global markets, commodities, currencies, U.S. markets, U.S. sectors, everything. So if this is something you're interested in, please come visit us and give us a look. Anyway, we are going to dive into Exxon Mobil here. And I've got one more after this as well. I'm going to take a look at Nike, but we're going to start here with Exxon Mobil. The Elliott Wave analysis, starting from the beginning, at least as far back as my data goes, and that goes back to 1980, as you can see here. This shows you everything that I have on Exxon Mobil. So it chopped around for the first couple years of the data that we have, and then it kicked off a very nice, trendy 5-wave advance over the course of multiple decades. It recorded a long-term high in 2014, and since then it has yet to be able to best that high over the prior 5 years. It does look like a major 5-wave advance completed. From what I can tell, it's the move that started in 1982 and gave us, again, this beautiful 5-wave advance. We know that trends play out in 5-wave advances, and we know when trends complete, they are corrected by counter-trend 3-wave pullbacks. It appears that we are now in a major 3-wave pullback that has currently lasted 5 years, and we're going to zoom in and take a look and see how much longer it might last before this counter-trend move ends and Exxon Mobil returns to doing what it wants to do, and that is to be trending to the upside. So let's go ahead and zoom in. We're basically going to focus on what's happened off the 2014 low, and here it is. This is a big, choppy, counter-trend mess, and there is nothing trendy about what has taken place over the past 5 years since that 2014 high. Again, you can see that high was recorded. It has not been bested. It's been approached several times over the course of the past 5 years, but at no point has price been able to move back above that. And what you can also see is the internal action within these moves. They're all 3-wave moves. Elliott Wave 101, everything that plays out in 3 waves is a counter-trend move. So basically, once this counter-trend action ends, we're going to know about it because we're going to see a completed 3-wave pullback, and then we're going to see trendy 5-wave move action return to the upside for Exxon Mobil. That is not what we're seeing at this time. It is possible that we just recently completed Wave B of this larger ABC pullback at the 2019 high. I don't know for sure that we have, but that is possible. If we have now begun the C wave down of this large ABC pullback, XOM will stay below 73 at all times. If it moves above 73 at any point in time, it means that we're still in this B wave that's kind of been chopping around since 2015. And if that's the case, if it moves above 73, it means that it's probably going to return back up towards the highs that have been being recorded in 16, 17, and 2018. You'll probably see a move up to 82, 84 in that area before the true C wave down begins and pushes XOM back down towards that 2015 low, potentially below that low as this counter trend pullback continues. So bottom line, I don't think this is a great buying opportunity. I think it is still very much in the counter trend pullback that's been in place since 2014. Nothing suggests that this pullback has ended, and I think a larger pullback has to be expected before it's over. Again, we might be breaking down now, heading down to new lows below the 2015 low, or we might get more back and forth action before that happens. That said, I want to address something that I think might be the reason that, John, that you sent this ticker to me, the possibility that maybe this pullback is over, and I'm going to show you why I don't think it is. Now, here is the labeling that we would have to go with if this pullback was over, this 5-year pullback was over. It would be an A wave down into the 2015 low, a B wave up into the 2018 high, and then a C wave down into the late 2018 low. Since then, we have a pretty strong recovery that could be considered trendy, and then a 3-wave pullback. Now, there's 2 major reasons why I don't think that this is the case, and why I think that the pullback is not yet over. First off, Wave C, as you can see here, ended around 63. Wave A ended somewhere around 57. That's a very substantial truncation, we call it, when Wave C ends above the level of Wave A. Unlikely. They're possible, unlikely. The second thing that we have to do to come to the conclusion that this pullback already ended is decide that, again, this is the first wave up and that this is a second wave pullback. However, this theoretical second wave pullback has retraced more than 61.8% of this sharp up leg in early 2019. Those are two major concessions that we'd have to make to justify calling this pullback complete. It seems very unlikely to me. Again, I think it's significantly more likely that the pullback is not yet complete, and that we're going to see a larger ending C wave down carry below the 2015 low before it's all said and done. So that's why I do not think the pullback is over. This is kind of steps it out a little bit and shows you in a little bit more general sense whether wave B completed at the 2019 high or it has yet to do so, that we'll see a larger pullback. And that would make sense because then it would take it down into its yellow Fibonacci support area before this massive counter trend pullback ends. So my advice, don't trade it. If you own it, I really wouldn't want to trade it or own it. I'd personally want to be out of it just because the future does not look terribly bright. If it is able to get above 73, you could ride it up to that 82, 84 area, and then I would sell it. I'd get out of the way if your sole purpose here is appreciation of your actual investment dollar. So I hope that's helpful. That's XOM. I got one more for you. And for everybody else, again, please come visit us at TrendLizard.com. We do this stuff every day, and we're good at it. Talk to you soon. Thanks.